Hey guys, just a quick update here on the ATM program. I know I need to do a better job communicating with you guys on this platform. I will have last month's results up and posted here today in probably an hour or two, 2 or 3 hours maybe. Another stellar month for us. We're beating the market, but I did want to go over some of our positions just to kind of give you an idea of some of the things that I'm thinking about. So AAP is up against earnings again, once again on the 15th. And the chart on that looks pretty darn ugly. It has been beaten. It's been beaten up quite a bit, and I think that there's enough sort of stability down at this level that I'll probably roll this out again. But I'm going to continue to work this. There's obviously a lot of extrinsic in that particular trade. If you look at our extrinsic, if we rank things from an extrinsic standpoint, you can see it's really high. All the way down here to, maybe Disney, which of course just reported earnings. So anyway, AAP going to continue to work that. BAC looks fine. I don't think we need to do anything there. Copper is solely a income trade. Not looking to take an assignment on either of these. I think it's just going to kind of sit around this 23 level, put up $1,000, brought in $100. If we could capture 50 of that, we're already up 20. That'd be a 5% return. That would be fantastic. Disney reported earnings. I don't think this thing's going anywhere. They reported slightly better earnings, but not enough really to change the overall picture of it. It's a lot of cost cutting right now. So we'll keep working this before we look at taking an assignment. But I would be interested in taking an assignment on Disney, either at a high short position or a low long position, and work it from an income standpoint. DVN did report earnings as well, and we're out. It didn't really, it released a little bit of theta here, but it didn't really release as much as I thought. This was a $3,000 trade with almost $300 of income potential in it. Now we've rolled it a couple times, but regardless, it looks really good. Don't need to do anything there. Now, here's the thing that I wanted to chat with you about. Enphase. I'm very, very interested in taking an assignment on this. Unfortunately for me, because we've had to chase this a little bit, I've got 2 contracts working on either side of this trade rather than one. Taking an assignment for 100 shares of this at 80, and that would be $4,000. That would be fine for my $73,000 account. But 2 contracts is a little bit big, and unfortunately that's where I am. We talk about this all the time. Ramping up buying power very easy, ramping it down very hard, and so I am very, very interested in taking an assignment on this. But I think the best way to do that is to try to continue to work this closer to its expiration. It's doing a good job, still creating theta erosion, and then pair that off of the SMCI trade. We are in a nice overall profit on the SMCI trade throughout the year. We're only 36 days to go. We may need to take this with this push up that it's had today and just adjust it up just a little bit, but I think that you can see we could do that at a nice credit, bring in and give a lot of buying power back. So I'm playing these 2 off of each other. If we can hang out in Enphase for a couple of weeks and burn the rest of this theta, and hang out in SMCI for another couple of weeks, and that would be maybe $300, burning $300 of that $900 of extrinsic. We could sort of just do a prisoner swap or a prisoner exchange. We could trade out the buying power that we have in SMCI for a potential and eventual assignment in Enphase. Okay, so that's kind of how I'm handling the buying power there. EWT looks great. FMC looks great. General Mills, we continue to cash flow it. It does have about a 3% dividend, and there's nothing to sneeze at. Helps us, but we continue to work this trade. I've got about 2,600 in the trade, and you can see that we're generating about $100 every 2 weeks. So we're bringing in about $200 of income per month on this for a $2,600 investment. We got the dividend on top of that. If you look at it from a chart standpoint, you know, it's probably, obviously don't have indicators on this chart, but it's pretty oversold down here. So we'll continue to work that. Groupon, of course, reporting today after the close, and I think we're fine on the levels here. If you look at 1650 and 1050 on the sides, and we're at 10 and 1850, so I think we're outside that range. I'm hoping that we can get maybe 45% of this extrinsic all released tomorrow, and that should look a lot better as well. Our IWM trade is scheduled for adjusting tomorrow, but good grief, it looks nice right now. It's hanging in there. Nice income trade the last couple of weeks on that. Oh, it's coming back down, but I think that it is finding some support finally. And sort of the same situation with O as DIS. And that is, it's got a great dividend. It pays, this is monthly, by the way. It's paying this monthly, 26 cents a share. So we're actually sitting pretty well overall. Obviously our current open position doesn't illustrate the past income that we have brought in or dividends that we received on the trade. But again, this is about a $2,000 capital commitment for me, and we're bringing in about $80 every 10 days, so about $240 a month in income on this $2,000 investment. Still pretty happy with that. Roku reported earnings, and I think that it's limited at this point for more upside. So I'm happy with where we're at here. The premium has always been good to us on Roku. We've had to chase it a little bit here and there, but this is one that I probably at this level would not be interested in taking a short or a long assignment at it. In terms of price action, it's just kind of like right, in the center. So we'll keep working this from a strangle standpoint. Good old Schwab. It's been a long-suffering trade, but again, it's not a bad setup. It's obviously down at some pretty. Let's see if we can get that. There we go. It's obviously down at, I think, a good valuation level, and I've got, we're well position sized in it. I've got $2,300 in the trade, and again, we're generating close to $70 every 10 days in it, so about $210 a month in income on that $2,300 investment. While that's good enough. That's good enough while we sit and patiently, or in some cases impatiently, wait for the thing to move back up again. But the income is there. Silver has always treated us well. It's a pretty good risk-reward ratio trade. I think maybe at the end of the year, when we look at all of our sort of core positions, and silver is definitely a core position, we'll be pretty happy with the ROI on that. SMCI, I talked about that a little bit. Going to try to suck off, maybe I'd love to see this cut in half. We gave a little bit of it back today. I'd love to see this down below 400, and I think at that point, this is an expensive trade. This is my most expensive trade. If you look at my capital commitments here, SMCI tops the list, or is the bottom of the list. There we go, tops the list, and so that would give us more than enough buying power to take an assignment on Enphase. But I'd like to cut this extrinsic in half. I'd like to bring in another $400 on that, and I think we can call it good there, and that's been a really successful trade. AT&T is picture perfect. Would that all of our trades look like AT&T right here. So first of all, it's got a crazy good dividend. We're making 8% a year on this, just sitting on the darn thing. We're juicing our own sort of dividend off of it to the tune of about $100 every 2 weeks. That's $200 a month on a $3,800 investment. And we're in the money here. So we are making money if it goes up. We're making money if it stays the same. We're making money even if it comes down, just as long as it doesn't come down below our 15 strike price. We rolled the put side up to 15.50 And the idea here would be on AT&T. You can see that my cost basis on AT&T is about $16.30. That's my current cost basis on these shares. If we were to close the market right now today, we would get called out at this 15 level. And there's we're very close here to the puts. There's a very good possibility we might get assigned on the puts, and so that would be fine. That would bring in $110, $105 or so of all that extrinsic. It would hit our account immediately, and it would just swap everything out. We would sell the current long positions. We would get signed new long positions, and my cost basis on it would be a little bit better as well. But AT&T is kind of what we hope for with every single one. It's what we try to get every single one of these positions into, right? We sell a strangle, we try to get assigned a short or long position at an extreme level, and then we try to cover it in the money so that we're protected whether it goes up, down, or stays the same. So AT&T is just picture perfect. TAN, it has been one that we've had to chase, but the premiums are still very good, and it looks fine right now. TLT is one that we've had to chase as well, but that is fine. Also, we're in a guts spread on TLT, and so we'll need to work on that a little bit. I'd like to unwind the guts spread, and we would do that by simply trying to lower the put and raise the call, lower the put, raise the call, etc. So keep working that, but it's been a good income trade for us. TRIP is fairly new position, and it's only out a week. It looks pretty solid right now. UNG has come down tremendously, and so it's sort of the same thing with UNG as with AT&T. If you look at my cost basis on UNG, it's $8 a share. Now that's we're a long ways from that, but we've been cash flowing this quite nicely. It's been a really good cash flow machine for us. So I lowered my cover call on this down to 6.5, and that gives us obviously the potential to get called out on this, and then if we did get called out, I would roll the put out and down. So just potentially improving our cost basis, but otherwise just continuing to cash flow. This is a $2,000 position that we've been, I think, pretty consistently bringing in maybe $150 or so a month in income on that. That's almost $1,800 a year in income on a $2,000 investment. So even though our current open P&L on our shares doesn't look good, the trade has been a pretty decent trade for us. UPS reported earnings before we put this on. I think this is a good entry level. That would be an expensive assignment, but I think it's a good level to look at potentially entering. URE is the real estate fund, and real estate's been volatile. Usually you don't get any premium on this, but this ended up being a decent premium. 82% probability of success. We're out a week on it. I think that's fine as well. Uranium looks pretty good at this level also. VFC, that's a new one for us, and again, that one's been beaten up pretty good as well, and I think probably reasonably so, but I think I would take a stab at a long position at 14 on that. VNQ is hanging in there. This has been a little bit of a tougher one to chase simply because it has the monthly expirations, but I would probably take an assignment on that as well. This is real estate once again, and again, I think we all understand why real estate is in the dumps right now, but I think that we're at the tail end of the damage, meaning the Fed and interest rates and mortgage costs and things like that. I think we're at the tail end of that, and this would probably be a good entry point for that. Wheat has just been a nice little cash flow machine for us as well. Hopefully it just kind of hangs out around this $6 level. I've thought that it's been a little bit too low. I really think that 625 would be more what you would call fair value on this ETF right now, but that's okay. We've been cash flowing this one quite nicely, and then XLK is the tech sector, so that's always a little tougher to trade. because it's obviously one of the more volatile areas in the marketplace. But we've been pretty successful at it, and we'll continue to move that around to try to maximize that income potential on it. But I think the main thing that I did just want to make you guys aware of is really a hard and fast intention to take an assignment on Enphase. Now, again, that doesn't mean that we get 15 days from now and we don't continue to roll this if the risk reward and the credit is there, right? So we want to get in at the right price. But I really think that, I'm not going to say it's a once in a lifetime opportunity, but I think it's a pretty good opportunity to grab this stock below 80 bucks a share, and we would probably in all likelihood fund that by getting rid of our SMCI trade, assuming again that we have only maybe $400 or $500 of extrinsic left in here, and we've sucked a lot of that out. But as you can see right now, we're only out 36 days on it. We've been out on this for 90 days for a while. Now it's only 36 days. I got 8,500 bucks in that trade, which is too much, by the way. It's too much for my asset allocation model. But on that $8,500, we've got 900 of extrinsic sitting out there, over almost one. There's 11-12% potential return in a month's period of time. So it's still a viable trade, and it's still working for us. But that's probably where the switcheroo is going to take place. Book the profit on that, use that buying power to take the Enphase. So quick little update there. Again, I'll try to get last month's performance out to you today as well.